Hello everybody, this is Books of the Stock Market. How's everyone doing? As for me, I'm doing pretty well. It is still super hot and busy at work, so not much has changed. In this video, we'll be updating what is going around in the crypto world and doing some technical analysis on Bitcoin. After that, I'm going to end this video with a little portfolio update. Last week, we saw Jack Dorsey, Elon Musk, and Cathie Wood participate in the B-Word conference. The goal of this conference is to debunk myths and provide insights about Bitcoin to institutions. Therefore, it went over very elementary information surrounding Bitcoin. We all know that the crypto world was looking at Elon after his tweet regarding the environmental effects of Bitcoin. It was almost as if the conference was made to convince Elon that Bitcoin is not so bad. Some key points that were revealed was that Elon does own a bit of Ethereum and Dogecoin. He did stress that he is not a price manipulator, but instead holds it as some sort of investment. Off this news, we saw Ethereum rise by 12%. More importantly, however, it was revealed that both Tesla and SpaceX owns Bitcoin. Furthermore, he stated that Tesla would resume accepting Bitcoin if there is proof that 50% of the mining is done by renewable energy. They then went on to comparing it to the early days of the internet. This obviously led to the topic of regulations and their potential of hindering the adoption of Bitcoin. For instance, Hester Pierce, who's also known as the Crypto Mom, said that the US should be allowing for more crypto ETFs to exist. She said that the US should try and follow the steps of Canada, in which they will allow multiple Bitcoin ETFs. This would allow for mainstream investors to adopt and invest in Bitcoin. We also saw Cathie Wood buy another 310,000 GPT shares on the dip. This is around $7.8 million at the time of purchase. ARK used ARKW to buy these shares, which brought the weighting of GBTC in the ETF to just over 4.1%. ARK also added another 71,877 shares of Coinbase in ARKF and ARKW ETFs. Furthermore, ARK has also added $53.6 million worth of Square across a couple of ETFs after Jack Dorsey announced that Square is making a division dedicated to developing DeFi on Bitcoin. Speaking of DeFi, let's look at what exactly Jack Dorsey is doing with Square. Square seems to be adding a layer of smart contracts on top of the Bitcoin blockchain so that Bitcoin could be used more like Ethereum. In the simplest of terms, it looks like Square wants to add more utility to Bitcoin. Square is doing this so that it can own a platform where people can develop different decentralized applications. Numerous business opportunities such as selling developer tools or even making its own token for use on the platform can be monetized as well. Furthermore, Square is a money-moving business, and we all know that cryptocurrencies allow for super efficient transactions from people across the world. By implementing DeFi into Square, it looks like Square is going to benefit a lot out of it. Finally, the big banks who are not really fans of Bitcoin even got into action. On July 22nd, JP Morgan said that it will allow all of its wealth management clients access to cryptocurrency funds. Funds such as Grayscale Investments and one from Osprey Funds were included. This wasn't really surprising news because we know that a lot of people wanted to get into Bitcoin and other cryptocurrencies. For instance, the narrative has changed a lot from not allocating any portion of your portfolio into cryptocurrencies to investing around 5 to 10% of your portfolio into cryptocurrencies. Now, many family funds have wanted banks to open up and allow them to invest in cryptocurrencies. If JP Morgan didn't allow their clients to trade cryptos, then I bet they would have just left and went elsewhere where crypto funds were available. But it's not all sunshine for Bitcoin. There still has been a lot of FUD surrounding Bitcoin. For instance, we saw this Bloomberg article be pushed where they were analyzing Tesla and Microstrategy's choice to invest in Bitcoin after Bitcoin falling around 41% in the second quarter. Many analysts are expecting repercussions due to investing in such a volatile asset. This is because companies need to record impairment charges when they invest in an asset that dips. This may not look so good on their books when they show and present their earnings to different investors. However, some state that there will be no impact because companies like Tesla have Bitcoin as a very small project. Microstrategy, on the other hand, made Bitcoin a central part of its business. They spent just over $2.25 billion on tokens as of May 18th. They also raised $500 million in a private offering to boost its Bitcoin holdings. This means that Bitcoin fluctuating will have a larger impact on MicroStrategy. Anyways, as you can see, a lot of articles surrounding Bitcoin do not have a lot of substance to it and can be categorized as FUD. With all of that out of the way, let's do some technical analysis. Here we have the DXY. As you can see, we broke out of this important trend line and even retested it and resumed upwards. This is pretty bullish for the dollar as we have all the hallmarks of a bullish continuation. Anyways, the dollar going up is really not a good thing for Bitcoin or any other asset, so we will have to see what will happen as the dollar continues to climb. But for now, we see that the dollar climbing does not have an effect on Bitcoin. We saw Bitcoin break out of this descending wedge pattern shown in purple last week after the B-word conference. Furthermore, we see that it has broken out of the lower bounds of the Wyckoff's accumulation phase, which is also really bullish. For now, we're testing this trendline shown in red. This trendline has been in place since March and has price interacting with it a lot. Since we just broke out of it, it won't be unusual if we saw any sort of retest and resumption upwards. However, it is important to note that Bitcoin still has a far way to go until we make new highs. We have to get above the upper bounds of the Wyckoff accumulation phase. Not only that, there will be a retest of the upper bounds as well. More importantly, however, we have to get above this red trend line that was made by Bitcoin making lower highs. In hindsight, I should have noticed that Bitcoin was making lower highs and gotten out of my position. Since this red trend line has so much significance, it is still too early to say if Bitcoin will make the monsters move to the upside until we get above this red trend line. Before I end this video, I'm going to do an update on my portfolio. We see that Ethereum is back above the $2,000 range. On top of that, I'm well above 200% in gains, so it feels a bit better. Ethereum had a good week partially due to Bitcoin rising and Elon saying that he does have some Ethereum. Litecoin is basically doing the same thing as Ethereum in that it is following Bitcoin's price and is making a small recovery. I'm down 20% off this trade, but I'm not going to sell until I earn some money on this position. As you can see, we're just below the $35,000 mark, and as shown below, we just broke out this major trend line. Overall, Bitcoin still has a lot of ground to make up before we can officially say it is out of the drought, but recent price action does point to our bullish continuation. With that, I'm going to end this video. If you liked this video, press the like button. If you have any questions about this video, leave a comment below. If you want more videos like this, press the subscribe button. This is Books of the Stock Market, and I'll see everyone next week. Thanks.